Welcome. This is the January 14th episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I'm your host, Marconi White, and today I'm joined by Benjamin the Whale Hunter and Amit the Range Sniper, who will answer, is the first off of 2025 time to buy the dip, or is it time to go risk off? After that, Ben Lilly is going to join us with another episode of the Flow Report, and he's going to be answering our East 2024 woes behind it, maybe a few other hot ticket items. We're going to jump into all the price action because I know everyone's asking right now. But before we do that, we got a couple of hot takes. I want to get some simple answers to complex questions. Gentlemen, are you ready?
Let's go, sir.
Oh, I love to hear it. And crystal clear for all those asking about the mics. They've upgraded them. They invested entire month's salary into the mic setups right now. So let us know in the comments if you're enjoying that. All right, guys, I'm going to start with you. Ahmed, biggest risk to 25 bull market, geopolitical, natural disasters, or the Fed?
Geopolitics.
Anything in particular? You get one answer. What's that?
Tariffs play.
Tariff play. Okay. Oh, tariffs are going to come in hot. Benjamin, what about you? Same question. Biggest risk to 2025 bull market, geopolitics, natural disasters, or the Fed?
No, I agree with Amit. It is going to be geopolitics and tariffs.
Oh,
I think that is the only variable we don't know how we will play it.
Natural disaster we can't control.
Oh, okay. Well, as everything burns in LA, I thought we may have a hot take there, or everyone loves to pounce on Papa Powell, but I guess we'll have to give it to geopolitics for right now. All right, let's get to this next one. After this pullback, do you want to be in cash, Bitcoin, or other crypto? Benjamin, which one is it?
No, if this pullback is complete, you don't want to be in cash. I think you have to be allocated.
In my view, this cycle you have to be in the trade. It's just a matter how much risk you want to expose yourself to. Always be in the trade.
Always be in the trade. So what does that mean exactly? Are you saying be in crypto, be in
some exposure?
Yeah, be in crypto. BTC, some exposure. Always keep it there.
Okay. All right. Well, and so we're going to get into that in a little bit because I want to be asking you guys exactly what that looks like, whether or not this recent pullback is finally complete. Are we seeing some signs that it might be? But we're going to get into that in a moment. All right. So you guys just said you got to have some exposure. What is the best strategy to survive January 2025? Amit, I want to hear from you.
January 2025, for this week, it will run. The way it has done the cleanup yesterday, it was like a liquidity grab when the price is moving down very hard. But it was again within the levels. It was a previous month low where it went and hit and then came back. It came back to the same position and just starting to move up.
All right.
Again, the way we discussed last week, the point to see is 97,500. If it starts to move up,
but no, don't get too far ahead of yourself. I want to see the charts. I want you to break it down. But what I'm hearing is you're saying be in the trade. It looks like we're green. Best survival is to be in. That's what that. Okay. All right.
Sorry.
Which I know. No, that's fine. I know. I always got to push you to go beyond 7 days. I know it's a bit of a stretch. That's why you're out in the garage most days.
Yep.
Benjamin, back to you. Same question. Best strategy to survive January 2025.
I think after tomorrow's CPI, we can look into allocating further. And I think January should be okay for the rest of the period from then on. And Q1 should turn out good as a result.
Okay. So that's more of a forecast and less survival, but I guess I'm gonna push you guys a little bit harder.
If survival is the case, like just stay allocated in Bitcoin at the very least. There will be better gambling opportunities on the trenches. Okay. I don't think there is much of clarity on the trenches right now. We need to see something new come up.
Oh man, bringing in those World War I analogies, things are rough already. All right, 2025 off to a rough start. Okay, last question here. This is the bonus one. Is the Trump trade dead or sleeping, Benjamin?
I think it is sleeping. I don't think it is dead. I think there was certainly amount of front run happened, just as we saw on the ETF side. Once we knew it was going to get approved, we basically doubled in value. Sure. But then you saw what happened for the rest of the period, right? So we had another run up happen. I think that's basically what we are inbound for.
It's exactly like President-elect. It will never do what it says. What you see is not what it's going to do.
Okay.
So in short, it's going to run hot. That's
All
what I
right.
think.
Oh boy, it's always going to keep you on your toes. It's going to make you want to
Exactly.
have orange paint.
Yeah.
Maybe this really is Bitcoin season. All right, well let's
Yeah.
actually get into the numbers because it's been a little bit of while since we spoke last. Although as I look at the numbers this morning, it's not. You could almost guess that not much has changed. BTC was trading at 95,000, ETH at 3,200, SOL at 185, and we'll get into XRP a little bit later because that may be on our radar. And then from an ETF perspective, we saw 2 days, at least the last couple of days, both on BTC and ETH, saw a pretty good amount of outflows. And I think a lot of people are asking themselves right now, after this sell-off, which took BTC all the way down to 90K, does it look as if this is starting to be more of a larger risk off? Should people be sitting on the sidelines? Should they be allocated? You guys just said, no, this is a time to be allocated. We got a little bit more turbulence coming in from the CPI print that's coming out tomorrow. And beyond that, you guys are hopefully, or at least you're optimistic that the signals are going to continue to say, what are we looking like going forward? Benjamin, I want to start with you. What's on your radar? What exactly are you looking like to give you a real signal as to whether or not this sell-off has maybe just been a liquidity grab and we can start to see some green shoots for some higher action?
So for context, if you are able to see my chart,
yeah, I see it now.
I'm positioning something from early November after the elections results came in. So this was the first spot where BTC took a break after the elections results came in, and that became like the support zone. If you see this white block,
yeah,
you can see price went back up to 100K, 108K, but it kept on coming back and retesting this zone. And I believe that's when the first local peaking type of a moment happened, when the massive flows as a result of the Trump trade probably took a pause. And then you had the rest of the market basically catching up. It's like, okay, this is going to be a great trade. Let's catch up. Let's go. Let's play. Now, what I see is that this zone has become a support zone of sort. Price is coming back, testing it, and it has tested it like 6 times now.
Mm-hmm.
And despite so many tests, it's still holding up strong. Now, whether it will hold up strong for the rest of the year or do we see a correction below, I do not have an answer to that. However, given the way in which this is getting bought back up, that still shows that there's a lot of buying interest in the zone. And we've seen a similar behavior last year when we had, I think, somewhere over here, when we had in November to January 2023-24, when there was the news of potential approval, or let's say there was this fake news from Cointelegraph, and everyone believed, and we had a rally, and
That's
then
right.
people were like, "No, it's gonna happen. It's not gonna happen." And then you can see that the first 2 weeks of Jan, all the way leading to 21st, there was a very bearish price action, and everyone was like, "Well, we are going back to 20K," and look what happened.
Mm-hmm.
We ran up all the way from 40K to 72K, right? I believe it is possible we are in one such correction spot wherein it's going and finding liquidity from the same zone, and potentially maybe we see a bit of a breakdown here as well in order to trap people into the sentiment that we have topped for the cycle, or the Trump trade is gone, the tariffs are going to kill everyone, there's zombies coming up. It could be a variety of reasons that they can come up with. But this block is basically your security wall, I would say. As long as that holds, I think it's definitely a good idea to continue to look forward to upside for Bitcoin and other assets. Even though a lot of other assets look shaky, especially when you take the low cap tokens and the newer tokens that have come up in the past 90 days. But yeah, I think we're okay.
I'm laughing because last week it was all doom and gloom because the AI agents were coming for everyone's jobs. Now it's the zombies and the fires that are coming for our little biddies. So
Yeah.
I guess one
They're
question.
evolving, no? We are humans.
Yeah, we're evolving right on a week-to-week basis. This is Darwin on 1000x on turbo mode. When you look at some of this activity here, I think definitely from a CT sentiment perspective, there's always this question of how much is this a seasonality, how much of this is playing into a 4-year cycle. From your vantage point, is there a lot of room and can you actually get some signal if you're looking at some of the seasonality effects and sort of how Bitcoin operates within a 4-year cycle trend? Or have we, the other way of asking that is, or looking at it is like saying, no, actually, we really just need to look at the data as it is today. The structure has just changed and augmented. We're not looking at whales as much anymore as one example. And really the seasonality is not playing into this. Do you have a perspective on that?
When it comes to assessing markets based on fractals or seasonality, personally, I allocate around 15 to 20% weightage to seasonality. Because I think that it is tantamount to accounting, astrology, and horoscopes and moon phases to make business decisions. While people have had successes in that angle, like for the sake of human sentiment, like 10 to 15% or maybe even 20% weighing into that, to answer to your fears, that's okay. But I wouldn't go based on that and make a few decisions which will lead to $1 billion accumulation or $1 billion loss. Like that's how I'd look at it. If I were to deploy $1 billion, am I going to consider moon phases and this seasonality as a reason?
Mm-hmm.
Or would I go based on tax season ending and there is new election that will come in the first few weeks of Jan every year, and how that basically ends up tuning the portfolios of the global markets, right? And typically this is what I think has happened. And this seasonality makes sense compared to seasonality of whether we want to say that it's a 4-year cycle or not. I don't think we have to discuss about the 4-year cycle right now, because with the Trump play, we probably might end up in a new 2-year cycle, or maybe we end up in a new 4-year cycle, or the top is in and we are in a bear market. There's just 3 opportunities, in my opinion. Okay, but it is extremely hard to define it right now. One way to define whether we have topped for the cycle, I don't have the chart right now, but I could explain, is that how the basis premiums and funding rates are for Bitcoin at the peak of markets, right?
Mm-hmm.
And typically it's so high, and you have cash and carry trades basically happening everywhere, in such a way that people are just buying Bitcoin, shorting Bitcoin, and they're making like 60% annualized yields. And that is the biggest play that you take it and explain to TradFi people in order to bring in their money into the markets. And the basis is so high. We have like 15% basis. And that type of situation is what you have. If you had the 2021 cycle top kind of price action. But somehow that is all completely, not happening in this local top type of situation, or top situation, if you could call it as. So I have hard time believing that we are in local top or making a top, for that matter. But as traders, it doesn't matter, like we go based on levels, like support levels. Where is the liquidity? How's the funding? How's the basis? How's the premiums? Is Coinbase going on a discount or not? Where is the flow coming from? That's what matters to us.
So right. So we're not seeing, I mean, obviously there's many signals that can suggest we're really starting to overheat. From a long-term perspective, you're saying that the funding rates don't really appear to suggest that. But maybe coming back a little bit more to what we're looking at here, I'm curious because I know you shared a couple more charts offline, both the order book, and the AV WAP,
Sure.
which hopefully it's so many acronyms.
Yeah.
But maybe you can walk us through what you're seeing there to really kind of, because I think the more near-term question, I think for any of the traders and maybe even the investors is, does it look like there are other signals suggesting that this pullback is kind of clean? Or where are we looking at? You just showed us from a block perspective what we're looking at that could be acting as a support as long as that continues to hold. Is there some other data you're looking at?
Yeah, that was first point. The second point was how the order books were looking in this entire zone below 96K for the past few days, all the way to the 89K zone, where if you see both the bid-ask ratio basically decides on how thick your order book is in a specific range. So in a 0 to 5% range from the price, is your order book thick enough? If it is thick enough, then you see high positive values. If it is thin, then you basically end up going into the negative values, which indicates that there's more selling pressure on the order book side compared to bid side pressure. And the past days, market was basically completely getting massacred. We saw AI tokens basically dump 70 to 80%, and you saw Bitcoin having a lot of bidding support over here. And that also translates to all these B signals that you see over here, which is based on order book depth ratios, and it was available as Panda Intel in Panda Terminal for those who want to play around with. But that consistently indicates that as price gets to this block, and this also validates why I have this block as a primary zone of confluence, because you see the order books thickening whenever price comes down to this block, right? So there's still bidding interest in this zone. So as long as that continues, I think we'll continue to get good price bumps. However, I think there's still a bit of risk of sentiment because of the macro markets, because of how VIX was trending, dollar index, and variety of reasons. I think probably Ben Lilly is much better equipped to discuss about, and that did influence the Bitcoin price action. However, it should have been worse if BTC was as weak as people say. It should have been really worse.
Right.
Which validates my thesis that we are just, cooling off a little, shaking out people, getting some liquidity. And, there are people who are talking about quitting. There are people who are talking about this is the top of the market, the easy game is over, all those arguments basically coming into play. Well, we don't know. Once president comes in, what will happen? We don't know.
Yeah.
But there's certainly going to be a lot of volatility, certainly going to be a lot of pace, and that is the important part. Sure.
Okay, so
wait and see.
Right. So I want to touch on two things. Ahmed, I know you're going to get into more of a trade perspective. But I want to get your, before you even get into these price levels, can you talk a little bit more from a psychology perspective? Because, I'm hearing what I just heard from Benjamin, this notion of people saying, oh, it's time to quit. The top is in. And it feels as though it's very sentiment driven, right? They're looking at some other information, telling them, oh, this is how I feel about the market. And it's not really analytically kind of proven out. What is your perspective there? Is that an accurate assessment?
See, I have a metric for my the way I look at the market, and I have a measure of how long I can manage a trade and how much risk I can trade. So the basically sentiment, because everybody has a different risk tolerance. So this is very personal thing that everybody should measure, but I don't know where, because it cannot be treated as a metric. The way I look at the market is basically, if I'm in a trade and if it makes me nervous, that means my risk management is strong. That's the first measure. So I cut down the risk, basically cut down by 20-30%. So now I'm comfortable. Now the second thing I measure is, when do I start feeling like, even if in profit or in loss, I have to cut the trade. I measure it in number of days and number of hours. So I have a risk tolerance. On a spot, I have a risk tolerance of years, and on perps, I have a tolerance of 15 days. After 15 days, I feel like I've been sitting on a trade for months. So it feels like it becomes a compulsion that I have to close the trade. So that's how I measure my personal sentiments, how I can take a trade. If I'm in a trade for 50, I can take a trade that doesn't make me nervous, and then I can sit on it for 15 days. I'm happy. So that's how I measure the sentiment. But I don't go by the sentiment of what is on the Twitter. I don't measure it that way. So it's a Twitter, because CT has different ways of looking at it. There is different agendas running there. So I never measure it by that.
Yeah.
Because I'm trading it, I'm looking at what affects me and what can make me make a mistake. So I measure those things. And that's how I trade.
I think that's an excellent outline for mapping out your risk. Sorry, I was cutting off. Benjamin, was that you or going back to Ahmed?
The past weeks what was happening is that there was a lot of fear in the markets, but I don't think it was even driven by Bitcoin. When it comes to crypto markets, it was highly driven to the low liquid coins, because there's a lot of allocation happening into the AI tokens and meme coins, mainly AI tokens. And when a few of the blue chip tokens started listing into Binance and they basically started underperforming, that caused markets to panic and people to basically call it quits from the market and to say that, yeah, we're done for this cycle. All those things came in. So I think the sentiment that we see in Twitter or most of the metrics has nothing to do with Bitcoin anymore. Bitcoin just dropped like 8%, right? And people were calling for end of the world. And I think we will see more of those behaviors in the coming cycles. I think we probably end up in a 45-day cycle when it comes to such a market. And you have in 45 days, something new comes up, it runs like crazy. And then you have like 30 days when everyone says that the market is done and we're all going to zero.
Well, I think this idea of going to zero is, at least in my book, I'm scratching it off. It's not stuff I can even talk about anymore because it seems as ridiculous as some of these high flying price targets. Okay, all right. Well, we could talk about Bitcoin all day, but you've kind of looked at the order book, you've looked at the block and sort of its support level. Benjamin, anything else from your perspective you wanted to share before we talk a little bit from Amit's perspective on the actual trade?
As far as Bitcoin is concerned, I think it's still quite healthy. I don't think there is anything wrong with it. It's still in the same range. Whether it is bears or bulls, it does not matter your bias. Bitcoin is not giving you the space to speculate over here. So don't try. Just be happy, just relax. Let the president come in and he will tell you what you need to do.
As always, keep you on your toes, right?
Yeah, point being is you have to be switched on for this month.
Yeah.
Like this is the same thing we discussed when the election results were coming. You have to be switched on. If you want to trade and if you want to make money in this market, there are certain days that are very important. And this is more important than CPI data coming in, than what president comes in and says on day one.
Okay, so Amit, I'm going to tee you up, and then, but before I do that, Benjamin, while Amit's answering his question, the last question I'd bring it to you, and you can answer after he's done. Is there anything that Jay's done from a positioning standpoint? Because I know a lot of people want to ask about that. In fact, we've had one question from the audience asking about Jay on chain trading around Ethereum and Solana. We'll get to that as we get through the rest of these tokens. But you can have an answer to that. We'll come back once we're done with Amit. So Amit, explain to me what you're looking at from a trade. We oftentimes look at sort of the spike that we see on Monday, a sell-off on Tuesday to trade for the rest of the week. Are you looking at that again this week?
Not this week. So we discussed this before we hit 100K, like ranges will be a bit wider when it starts to run. So from Jan onwards, I started looking at a weekly range rather than the Monday range. So this is how it has been behaving week in, week out. So the dump that came in yesterday, I'm looking at the same order block that Benjamin was looking, but I'm measuring that order block from the perspective of delta. What kind of delta it produces when the price starts hitting that order block? So order block in my terms is basically price moves up, then it forms a foundation there, then it moves up again, and at some point it comes back and tests it. So this is what happened here. This is where the price came in and retested itself. So this was the point. And this is right in the order block coming in. And it produced a negative delta. A negative delta basically is when all your bids are sitting there and the price comes in very sharp on the market orders and picks up everything, but reverses from there. That means it has proven that bids are stronger and the buyers have come in and they've taken control of the price. So in my mind, this run for this time, it's not coming back to previous week low. So the way I would trade is, so yesterday we were discussing how we can, if we have to trade it, how would I trade it? So I would take a trade from here, previous week mid to the previous week or yearly open, go 20-25% of the balance, just to see how it behaves coming back down, and then run up to previous week high. So based on the discussion last week, this is the level I'm looking at, 96,700. If it goes above previous week high is in, definitely, then you will see the same structure going up. It will go up and weaken into this order book, right, what you can call it an order block or a demand or a supply. So it will go into this and hit there and then start coming back, because there are lots of bids or asks sitting here. What you want to see is when it goes in there, it creates a positive delta. If it continues to create positive delta, then we have 110K coming. But if it creates after the first initial push and it starts to create negative delta, then it's basically comes up here and starts coming down. And at this point, if you see a negative delta coming in, that means the sellers are in. Then you have again a short down. So for me, the trade is basically, again, still you have 4 to 5% game here. I would basically put my trade here. I will ladder down in this range and wait for it to fill. If it doesn't fill and start to run, I will chase the market from here all the way up to this is 6% trade. So not bad.
Yeah. I think that's pretty clear. And looking at the delta positions is pretty good. Risk on, risk off kind of appetite. And it's also interesting. You just said, summarize, like you've moved into longer ranges now that we've moved a little bit further into the cycle, and you're expecting some of the ranges to be a little bit wider.
Yes. And you asked about the scenario when we would know we are in trouble. So this is the order block. If 88 gets broken, then the next order block is 72. Not an order block, but next base is sitting at 72. So it cannot be more clear than this.
Yeah.
Where it has to go, what it has to do, and what point we can see the invalidation. So at this point, if you take a trade and if you want to think you are in trouble, at any point it goes below 91, you can cut it. Because this is coming into a trajectory where you have to take a couple of attempts before you get a profitable trade, because ranges are so wide. So it's not like you can manage 2 or 3% move. Before 2 or 3% move was $2,000, $3,000. Now 2 or 3% moves are even bigger. So you have to manage the risk from that perspective. So you cannot be in a position where you are over leveraged. So you have to keep a very keen eye on leverage, how you're playing your trades. So again, like we started this year, 2024 rather, saying how to design a trade rather than just take a trade. So you have to consider all these things and then take a trade and see how it behaves. And then you need to have your own thresholds around it, saying, I know this is an invalidation level, but don't play the hopium game. If you see it's breaking down, cut the trade. Take another chance.
Yeah, this isn't the time to mess around and find out. Right.
Yeah, there won't be any chance to find out later on, because if you get liquidated, then it takes a bit of a time to come back into the game, because it knocks down your confidence.
Absolutely. And knocks out your capital potentially too.
Capital people still can arrange, but confidence is one thing that's gone. It takes quite a time to build back.
Oh, man. Amit the Philosopher has shown up in 2025. We're going to have more TED Talks coming from him.
I blew up few accounts initially when I started, so I know exactly what I'm talking about.
That's right.
I blew up 3 accounts in a day, so yeah.
Okay. Well, there you go. If you're gonna do it, make it quick. All right. So I think there you have a good summary of where Bitcoin sits. It seems to be looking pretty solid with the block there. It's been tested several times. We're seeing good buying in that range. That continues to hold. We could say that perhaps the sell-off has kind of reached it's moving in a direction of kind of being an area of support that we can move up from there. And all eyes are on the sort of the Trump trade as that comes in over the next week. I guess last question I had, Benjamin, for you was around J and trading. What is it doing? Has it started to take positions? Is it still risk off? Is there anything you could share, Benjamin, from that perspective?
So on the Bybit side, it's still risk off. It did a few trades on Link, bought some dips and traded off during the past week, but it's still highly risk off.
Check.
Because a lot of metrics have still not triggered a strong buy signals.
Okay.
So it's still a risk off situation when it comes to the Bybit side of trades. On the on-chain side, the bots have been risk off since 25th or 27th, I think. So there's been no solid buying happening over there. Because we've seen everything dump like 70%, so it's good. So
from your perspective, when you see that, is because I know Jay is really designed about sort of tier 1 risk management. Does that at all give you a pause relative to some of the other data that you're seeing, or is it just knowing that because it has such a strong risk management sort of allocation or the design that that it will pick up a little bit once the market has to be in really more of a confirmation, let's move forward phase for it to really take some risk and put it on the table.
Yes, because the game is a bit different when you go on chain and when you're operating on the centralized side, because the assets are completely different. The behavior is completely different, right? And when these assets on the on chain side, they start to bleed, they bleed real hard. Like there's no, like middle ground.
Yeah.
It goes up like 3x and then dumps like 90%. So the behavior, the cyclic behavior over there is very different. So the risk management is also very different compared to the order flow side of things.
Okay.
So yeah, it's very cyclical. Like you'll have suddenly 10 days of extreme amount of trades, like in and out and so many trades, and then you'll suddenly have 40 days of nothing, because markets are also cyclical, right? And
Yeah, so-
you have to remember on the on-chain side, it's like you can buy and you can sell, and you can't short.
Right.
So you don't capture anything on the downside. That's so different on the Bybit side, when you're able to capture by taking short positions, so you can capture downsides. So that's why the frequencies are slightly different. And yes, since yesterday we've seen a few wicks and upside, but when it comes to low caps, we're still far away from signals, I guess.
That makes sense. I have a question here from Max Meyer. It says, great work on Jay. I haven't seen any trades lately on my SOL and ETH positions. Is framework still under active development, and what are some roadmap items? I think, Max, the answer just that we just saw or just heard is really that the risk management has to be very different for the on-chain system, because the products are very different and the buying and selling behavior is very different. So hopefully that answers your question as to why you're not seeing some new positions. The market just isn't really ready yet, and Jay's not ready to take some risk for those accounts. I guess, Benjamin, is there anything that you can share? I know a lot of work is underway. I'm not sure there's anything you'd want to share today from a roadmap perspective, but you can answer that.
Well, on the J Labs digital product that we rolled out on an alpha version, we have a lot of changes happening over there with respect to security side, with respect to order execution, latencies. On the tech level, there's a lot of work going on. Thankfully, the markets are down, which helps us a lot because there's no new signals coming out. And that helps us in doing a lot more work. We are expanding in terms of the type of agent strategies that are coming up. But I'd rather be tight-lipped about it than talk about it and have a lot of people, get hyped up and ask about access.
Yeah.
I'd like to roll it out and surprise people rather than it's a pressure on us, and we'd like to do things right. Which is why we are silent about the product. We don't promote it. We don't market it.
Really, to be honest, I'm really excited about the product. It's really the way it's shaping up. I think truly what we are saying, it can really change the way we trade and the way we manage our funds.
Well, I'm very excited too, because then, Max, that's a reason you have to check into the trading pit every single week, because I'm bringing these guys back and I'm going to be grilling them on the questions that you're asking about the roadmap. But no, I mean, as they bring out the new features and functions, we're going to be talking about it here. I'm excited as well. I fortunately get a little bit of a sneak peek behind the scenes, and obviously I'm allocated. I'm using these services as well. I'm a huge believer in them. Very excited to see where this goes. Okay, well, let's wrap that up. With my permission, okay, let's hear it.
Can I ask Benjamin to showcase the on PT, right, on Panda terminal, the way he was showing the order book and the way the orders got generated, how easy it is to generate orders or generate signals at the back of the order book that nobody has in the market. And that's I love about PT side of things, on Panda terminal side of things, basically how easily you can generate the signals with your permission.
So hold on, I have to roll it back to that version. But when I was showcasing the bid side order book and how we are able to see a few green signals, which helps you understand whether there is a high bidding potential or not, those are a few signals which you can use in order to execute trades personally yourself. Let me show you. Just give me a sec. So in Panda Intel, typically I have things saved up, so I don't have to wait for a lot of things. Yeah.
And there you go. The thing I loved about this Panda terminal platform is basically how easily you can create orders or generate signals at the back of the order book. Basically, you can play around, set up the way you want to see the order book, and then generate the signals at the back of it. Like if you are hitting the thresholds, what would happen, how frequently those signals come, what time frame they come, how many trades you will generate. It's fantastic.
See, primarily the key point is that if you know, let's say over here, what we do is that we like these two ranges when it comes to bid-ask ratio in order to see, okay, these are thick ranges that the market, or there are other algorithmic bots in the market which respect and deploy capital. Okay. We identify those ranges and basically we try to put an intel on top of it using this feature that we have in Panda called Panda Intel. So using that, you can design thresholds on a no-code basis to say, okay, these are potential selling pressure areas and these are potential bidding pressure areas. And when you apply that, you basically get this green and red circles, which tells you when those thresholds get hit, at what points do they get hit. Now, when you get these B signals, you can literally start to allocate some amount of capital, be it like 1% of your balance, or let's say you want to basically define it as a range on the right panel, for example, I'm showing. You can literally say from zero, in the sense like from current price for a 10% range, I can say, let me split it up for 20 orders and then allocate a size, take up a leverage, and just click buy. So it will ladder down for a range. And then as these signals keep coming, you can watch it and you can be sure that it is worth it in order to fill during those points. Because when prices bounce back up, you are going to be in a much better situation. It helps you on a combination with other metrics as well to figure out what are points you can afford to take a risk to scalp in and scalp out. So Panda Intel is a huge tooling that you can take your trades data, order book data, translate them, and to see whether you want to execute trades in this zone or not. It refines your entry positions as well.
So you're able, if, you know, from an outsider perspective, you're able to combine really all the intelligence, sophistication you have around the metrics with the risk management that Amit, you're always talking about, to really improve the success of your trading.
Yes.
Yeah, I feel like we're underselling this.
Because there is important factor here, the exponential factor that you see on the screen. That basically manages your risk in a way. Basically, when the price is dumping, you can act at any point of time. You can cancel all the orders and increase your risk threshold. As in, basically, you can move your risk right from the where it is sitting, if it is equally distributed, to bottom of the range, or make it basically go towards the top of the range. It's based on your conviction and the alpha that you, as a user, you generate on the platform. So if you have a custom metric based on the order book, based on the trades, based on other data that you can combine together, and that generates an alpha, based on that you can manage your risk that way. So if you're seeing a signal that comes once in 3 months and you want to allocate heavily there, right, then you can go in and say, I want to basically allocate 50% of my balance in 3% range, 0 to 3, or whatever range you have identified. And my exponential risk, or basically exponential means as the price drops below the certain range, this is where I want my risk to sit. And that's where the average entry price would sit. And then it becomes much easier because you can see everything visually. You can design your trade and then you can execute from there.
Excellent. Amit, if people are curious to know more about how they can start using Panda, what's the best way to find out about it?
So there is a Panda Telegram channel which will lead you to come into, I think there is a Panda chat as well, where typically there are some discussions about Panda Intels and what other signal opportunities that you can generate inside the platform. So it's more of a community chat room. And we have also in Panda Terminal, there's tutorials, there's case studies coming up. There's also an open marketplace of Panda Intel, the views that, for example, Ben Lilly comes up with using his borrowing rate models. So a lot of those are coming up in the community marketplace as well, which is all free. You can access it, enjoy it, and use it in order to execute trades. Because it's not just centralized tooling. You can also execute on Uniswap or Bridget, do whatever you want. You can basically use this for everything.
The tooling is free. That's an important bit. I think we never said it that way, but the whole platform is free.
Wow. So, okay. So if people are interested in this, we should get them connected to the Telegram channel.
Yes.
I'm not sure we've shared the Telegram channel, the URL to get into that before. I think if you guys can share it here, we can put it on these two and include it in the show notes going forward. So
sure.
Excellent. All right, Ahmed, anything else? And I agree. We've undersold this. We need to share it with everybody. I mean, the whole point of what we do here is to make everyone better off from a trading and investing perspective. And this seems like we've just given them one of the best tools they can find in the market. It's a class. So is there anything else you'd want to share before we move on to Ethereum, our favorite punching bag?
Yeah, I'm not touching Ethereum. It's so bad. The way it's burning everybody around them, it's no point. It's below 3K. So this is basically like last 6 months, 7 months never happened. Why you want to trade Ethereum at all? There is no narrative. There is nothing you can do. I mean, the entire ecosystem is dead. If you want to do a 90 cents trade, you have to pay $20 for it. So why would I go anywhere near it? And the trade wise, it doesn't make sense. I mean, just sharing the chart, right? The price action wise also, it's not making sense.
All right. So walk us through from a price action perspective. We can talk a little bit maybe about some of the other convictions. There was a question here from Toby. Toby, good to see you here. Hey, you guys still believing in ETH? Kind of interested in each of your ETH targets. And Toby, if you haven't already, I think our last episode, we gave some targets for Ethereum. Maybe it was the last one of the year. And but let's talk about the trades.
I have to interfere here. So our sentiment with respect to ETH is, keep in mind that we are day traders. Like tomorrow morning, we will flip and we'll do something else.
Yes.
Okay. Like we'll flip. Fundamentals is completely a different game. And fundamentally, we still think ETH is undervalued and it will still go up. Whether it goes up in 3 months or 6 months or a year, I have no idea. And we still stick to all the metrics that we have developed, what Ben Lilly and the on-chain team has developed with respect to fees, ratings. All those are still valid. And those opinions are still valid from a fundamental perspective. On a local day trading perspective, right? Our opinions will always swing so wildly when it comes to ETH because of frustration where we handle it. So please take that as with a pinch of salt. Like we will always call it shit when it comes to trading. But fundamentals is very different ball game. And I let Ben Lilly handle that fundamental side of things because he's the expert on when it comes to ETH.
Great.
Trade side, I'm never touching ETH.
Okay, great clarification, Toby. For again, if you have a thesis here, what we're doing here isn't we're putting forward a thesis that you can think about from various angles, various time frames. This is more from a trader standpoint. Does it have legs for a trade that's risk adjusted, right? Because I mean, you've heard these guys talk about a bunch of tokens that maybe from a fundamental perspective have no reason to even be alive. Yeah, but from a trading perspective, there's sufficient liquidity. There's a reason to trade it. Right now, we're talking about Ethereum. It seems like it's dead in the water from a trade perspective. So, Amit, back to you. I want to hear from you, your view on why you're not touching this at all. I know you've talked about it for weeks. It's really just hasn't given any kind of life. Why aren't you touching this one right now from a risk trade perspective?
I mean, it's sitting at previous December low. So I'm not touching ETH till it goes our previous week mid, at least 3,400. 3,400 and till it recovers 3,400, there is no value. from the trade perspective. So when I say I'm not touching it ever, it's basically till it recovers a certain level, and then I'm back into the trade. Like Benjamin said, we can flip tomorrow morning and say, yeah, it's 3,400, let's trade. This is the trade I'm looking at. If you can see my screen.
Yeah.
So 3,400, if it takes back 3,400, then there is a trade to be had. Then there is a 20% chance, or basically there is a 20% profitable trade you can take, given it doesn't decide to go back. So at this point, there is no trade, because sitting at such a low level, it can just break down and go to 2,500.
So I think this is pretty clear. I'm not sure it could be much clearer. I'm not sure there's much more to share from an ETH perspective. Toby, we will be bringing Ben Lilly on. I think I heard his mic check just a few minutes ago. He'll be talking more about fundamentals, give you a different perspective on how you think about this long term. But from a trade perspective this week, off the table, way too risky. Let's move on to Solana then, which may surprise some people when they're looking at sort of risk-adjusted trades. Does, Solana, I think it reached maybe 260 just a month or maybe 2 months ago. Last I was checking this morning is at 185. A lot of good volatility there. Is it starting to form a base that looks for a trade? Is this another one that needs to be risk off this week? Ahmed, I'll start with you, and Benjamin, come back to you and maybe some of the data you're looking at.
Solana, there is a trade. You can take it. I mean, the way I would trade is basically, again, this is the base that it has created after moving up or after moving down, basically. So it has to take this level out. If it can stay above this, about 190, 195, then there is a trade. I won't touch it till then, because see, the way it's similar structure, it's coming down, creating a base and retesting it. So it came down here. So this was the setup, sorry. So it came down here, created this structure here, went down, and now it's retesting it. If it goes above it, then there is a chance. Then it basically run up here, then retest again, and then run up again. But if it falls below this, then there is no trade. So I will wait a little bit and see how it behaves at this level. So if it comes back and retests this level the way BTC has done, there is your trade.
You got do you have 3 exit points there, or are you literally looking at the green line and then above that?
So this is 190 and above. I'm looking for a trade, not here. So if it can go above 190 and stay there, then there is a trade.
Right. Yeah. No, I guess I was looking for an entry point or exit point. So if it's able to test the 190 range again, are you looking at getting out at? I'm just making sure my eyesight isn't what it used to be. 220 or and above.
So basically, again, you from the taking of the profit perspective, right? You take at multiple levels. First, it will be previous week mid. That will be 202 because it has spent quite a lot of time on 202. And then basically you take off 40% of the trade. That's profit in the pocket. And then move your entry to the kind of break-even position. And then from there, you will wait for 220. So then I would basically go and book 60% here, the rest of the trade at 223, and then wait for the next week new signal to come in.
Okay. Benjamin, I want to bring you up. I thought you had some other information you were looking at. I want to see if you have confluence with what Ahmed's looking at from a trade perspective. You've previously had your 3 different trades.
I think when it comes, so I had that, 225, 200, 175 positioning. Everything is filled and I'm still not liquidated. Hooray. So it's still there. And I protected that position in a very smart way.
How close was it?
Yeah, I protected the position in a very smart way, I logged out of that account. So
there we go.
Position is still
close
safe.
your eyes. Close your eyes.
Yeah, close your eyes and you can basically feel heaven. So it's still there. So let's see if it gets liquidated. If it gets liquidated, it gets liquidated. That's
wait for a margin call.
Yeah, it is again, right? But in general, when I look at Solana, I think we are okay. But the confidence comes back once we are able to have a weekly close about 200, to be honest. The underperformance of Solana after Trump election results has been quite, bad, in my opinion. I would have expected Solana to just rocket up and even do 300 or 400. I felt it underperformed compared to what it should have, to be honest, because it just basically performed same level as BTC did. That's okay. However, it could not hold up at all. It just bled down consistently, right? So I believe it has a bit to do with the unlocks that's coming up in March and so on. There's people probably front running to exit and be at peace, which is okay. And now market is trying to find a footing on Solana. We still see a lot of economic activity happen on Solana as a result of agent coins and the drama up over there. So I think Solana is okay for now. When that activity dies down, I think Solana is in big trouble. But until then, we're okay. So we need to have a weekly close above 200, and that would be a great sign to basically target 275 or new all-time highs. Until then, like scalp it, trade it, be in and out. Just be cautious.
Just be cautious. Okay, I'll take that. And definitely for those who are interested in some of the sort of the fundamental aspects that he was touching on, we may get to those in the flow report today. It's always a little bit interesting to see what we're able to get to. There's a lot of information that Ben Lilly's going to be covering. I do want to ask him a couple of macro questions, so the poor guy's going to be assaulted with a set of questions. But okay, so that takes us through our majors from a BTC ETH Solana perspective. BTC, there's a trade to look at. ETH is definitely risk off this week. Solana, if it can get above that 190 range and double tap that, then we can see it getting a little bit of action. Maybe there's a trade there, and definitely looking for that strong weekly close for Solana to really show some strength. We'll see if maybe the flow reports suggest anything else. Guys, I know XRP was mentioned in the chat. I did want to throw out one here from a jumper perspective. You guys want to talk XRP first? See if that's something worth trading?
XRP looks okay, and I think it's definitely held value compared to a lot of other majors. I mean, as you look at my chart as well, 4-hour 200 moving average is at 2.3, and it has held up. And there was a lot of order book support, so good confluence. And I think it's formed a range since December. So we need to see how it resolves, whether it resolves to the upside or not. But to be honest, I think it's a lot of things are just waiting for the new administration to come in, and market still perceives that to be good news. So I do believe it will be good news. So we have to wait and see. But XRP does look okay. Does look okay.
Okay, maybe there's
better than a lot of assets. Better than a lot of assets.
It's outperformed. Yeah, JV has here was the Donald Trump hype pump churned to sell the news. No, I think everyone still thinks it's going to be the base case is going to be a good sign, but obviously we're going to have to wait and see what happens with the market. Geopolitics could definitely throw a wrench, although these guys are saying maybe it's going to be the tariffs themselves that do it. So we'll have to see. Really, next week's going to be an interesting one. Okay, guys, last question for you. I'm going to throw it out to you. This is the surprise one. We got AI XBT. That's strong bullish coming in as a jumper. Is there a trade there, or is the volatility too high?
It's already gone up a lot, to be honest. There was a trade, I think, last night perhaps, but I think we are in a riskier situation over here. We have jumper alerts. That's probably because it's cleared a lot of ranges and it does look strong, but I don't think you can trust.
You can't trade this. This is basically you throw the money and hope, pray to the Lord.
So you cannot trust low liquid tokens at the moment for at least a few days. Wait for CPI to be over. Probably even wait for Trump to come back in on Monday or Tuesday, I think. Like, just wait. It's just 1 week away, Like, we're all going to heaven. Be happy.
Yeah, there we go.
It's a pump and dump scheme. 50% up, 50% down. Play how you want.
Yeah, I have a lot of personal opinions for this token, but if I open my mouth, I know I will have a lot of Twitter bots coming at me. So I'm going to be careful on my personal opinion.
Man, first it's a zombie, first it's AI agents, then it's a zombies, then it's agents.
There is a whole framework for it.
Yeah. All right. Well, okay, there you have it. There you have some trades. I think what I'm hearing, if I want to summarize here, is that it looks like we're forming a range. The sell-off may be looking like it could be getting some strength. I would say, hey, we found a base. We're able to move up. We're still going to see some volatility most likely tomorrow as we have the CPI. Definitely from a trade perspective, it looks like BTC is the way to go, but don't get funny. Don't be playing Don't be going long leverage. This is a time to be safe, not overly risky, but you do want to be in the game. And contrary to the last 8 years, Orange Man may be good. When we come in next week, we think that there's a trade, and we're expecting the market.
Orange Man is always good.
Orange Man is always good. Okay.
Yeah.
Well, I don't know if he's talking Bitcoin or something else. I don't know what Orange Man would even refer to in 2025.
I think this is the year where the color of Bitcoin will change.
Oh, really? To
Orange.
Orange, deeply orange.
The
Wow.
real orange.
Man, I'm worried about these guys. They invested all their money into their mics. Now you can hear them crystal clear, and I just don't even. I'm terrified of what comes out of their mouths, because now you can actually hear it every time. Love it, guys.
Okay.
Guys, anything else to share before we build?
Yeah, we are good. I'm good.
Bring him on. Bring him.
All right. Bring them on. Grill them. Well, gentlemen, thank you so much. If you're interested in more of their thoughts, follow them on X. Definitely get into to Panda. Check out what they're sharing there, and definitely be checking them out next week. We'll bring them back on the trading pit, hear a little bit more about Bitcoin and the other opportunities for the trade. But thank you, guys. Ben, Lily, are you with us?
Thank you.
All right. Thanks, guys.
Nice session.
Oh, looking at you with your steely eyes, looking all freaky. I love it. How you doing this morning, Ben?
I am good. Wish the markets were up, but you can only ask for so much. Volatility is in the name of the game, and Trump is coming, and he is the volatility machine.
Some might say a wrecking ball, an orange wrecking ball. We'll have to see. Okay, Ben, we're going to talk about flows. That's where you're specialized. That's where we're going to be focused on. I do, though, want to give a little bit of attention, if we can, just for the macro, the outside forces. I put something on X just maybe it was even last week about how I felt like 2025 may be a little bit, or maybe Q1 is really about sort of outside forces. We talked about the dollar going up, the Dixie being strong. You're seeing questions coming out at the high level about rates. So there's a variety of things happening. We were just talking, what could potentially be a wrecking ball? It could be tariffs. Rather than getting into all the analysis, I know you've focused on rates a lot. You've talked at least somewhat about the Dixie. What's a high level primer to say, okay, are you looking at any of this macro stuff? If you are, what's something that's kind of caught your eye? What do you think if you're sitting in the crypto markets, you may just want to be aware of from a macro perspective as we head into January 2025, looking to survive?
It's a loaded question, Marconi. It's like 20 tangents deep right there.
I come in high. Hey, listen, the other guy said they needed to bring you on so I could assault you with questions. So I did what I could.
I feel violated.
Oh, geez. 2025 off to a rough start.
Yeah, if you're sitting in crypto, and I haven't been paying as much attention to macro as last year and the year before, mostly because what was taking place back then was just really historic, and it might help just to give a little context for why did this whole change in rates actually matter so much, and what should we expect moving forward, especially as we sit within crypto where we don't want to actually pay attention to every Jerome Powell word utterance that exists and everything that all the Fed chairs have to say. How can we stay kind of focused? And for those that like to enjoy that game in the trenches, look over the let me back up here a second and just say 2-3 years ago, we were talking, at least through Espresso, about how rates themselves are actually cyclical. So in Bitcoin, you have these periods that are 4-year cycles that have to do with the halving. And we haven't really had a chance to explore, are there 16-year cycles that we don't know about? Are there, these longer duration ebb and flows that exist that we have yet to realize? But when it comes to setting interest rates in the market, there's these cycles that exist that are 70, 80 years long. And I don't think most understand that. We kind of look back to what happened in the 70s and the 80s, and rates were historically high. But then if you keep going back, there was another period, I believe it was the 30s or 40s, definitely could be wrong on the era there, but that was another period of low interest rates. But then if you keep going back, and that requires a bit of digging, outside of kind of the normal tool sets that we use as analysts, you actually find that rates were actually elevated kind of before that. And then they came back down. And you see this over the course of centuries. And it's important to just have that little bit of knowledge, because if we look at what has happened since really the housing issue in 2008, when rates hit the floor, and then for the next, what was that, 15 years, we had this low interest rate environment. And we've kind of, on my chart, you can see it right now, we've kind of had a higher high that we hit.
Yeah.
Right. So if we zoom back and think about the cyclical nature of interest rates, we could have a higher low form. All right. With that understanding, like, we shouldn't expect rates to get back down to zero. And we're going to have to somehow exist in this, higher high, higher low rate environment, possibly for the next few decades. All right. So that's why paying attention to what the Fed has been doing has been so important. And it's in part why those that went ahead and kind of real version, which is when the 2-year rates kind of flip and become higher than the 10-year rate. Historically, you can see kind of why that was creating sort of this recessionary signal. But if we're going to be trending up and to the right, that's not going to have the same signal as it was. So at the time, in 2023, especially in 2024, kind of my understanding was that if these yields were going to be inverted and somehow things weren't going to be recessionary afterwards, why would that be the case? And that's because we could be entering this period of higher highs and higher lows for interest rates. And so that's important. And because of what Jerome Powell did, and I use the analogy of a bed sheet flip, if you recall, where the 4-year, the 8-year treasuries, those are going to be very responsive to how rates get set. And so he was yanking them up as fast as he could just to make sure that bed sheet kind of got that flip, to get all that air underneath that was possible. And then he was going to pull down the front a little bit. And that's what we've seen. And then the back end, as that sheet kind of floats out, those rates start to rise a little bit. And so the fact that you see the rates rising right now, even with the dollar rising as well, it's, in my opinion, that's not a warning sign of anything. If anything, it just kind of shows that the Fed is doing what the Fed has wanted to do. And so if we just have that basic understanding, like, okay, you know what, we're in a pretty good position in terms of like how the treasury market's working, how rates are going. These are good signals. You want to see the 10, the 20, the 30-year yields rise. You want to see them higher than the front end, right? Historically speaking, that is an indicator that we could be moving into a period of productivity to higher growth, right? Otherwise, nobody would say, you know what, that 30-year, I think I need to lock in these high rates because the Fed's going to have to drop it down to zero. If that's the mentality, then you would see a lot of buying on that 30-year to lock it in. But you don't see it. The yields are rising, right? Yeah. That means people aren't buying it. But I know that's confusing. But
I guess to kind of take it to the conclusion that you're kind of looking for. And again, I didn't intend to grill you on all the data, get into this too long, but if you're going to be spending any time in these spaces where you're connecting to other people, there's times when we rotate into a macro, and I feel like January's kind of done that with the dollar hitting 109. Discussion about rates and the fact that they may not be bringing them down, and may not have many rate lowering those rates in 2025. I think there's a lot of people say, "Oh, wait a second, is this market done for?" I think your message is, well, no, this is kind of playing out the way perhaps you intended. Rates are going to be going higher, most likely. We had a very odd period of them being much, much lower. Now they're going to be a little bit higher. That doesn't necessarily mean everything is risk off. It also doesn't mean that everything is just going to slow down. We could be heading for a period or building up towards a period of growth and productivity. Is that last statement fair? Is that characterized?
We are trending in the way that I believe the decision makers want to be trending towards.
Okay.
Right. So we're pretty good shape. Usually when yields are running, everyone's like, oh my God, the world's going to end. Right.
Mhm.
But it's not necessarily the case. Like, it's actually not the worst thing right now. This is kind of what you want to see. I get it. It's bad for mortgages, but from a dollar perspective, you're seeing it rise as well. So that kind of creates these warning signs as well, because typically you see the dollar start spiking. Everyone's moving into a safe haven asset. Like, the world's on, I don't really want to say that pun there. I was going to say the world's on fire, but it's not the time for that. If anything, when we look at the dollar, we can kind of ask why it's moving the way it is and kind of get that understanding of, what, Donald Trump's getting ready to come into office. He's expressed a lot of these, points having to do with tariffs, for instance, and understanding, like, why does that discussion drive the dollar higher? Well, it's kind of simple, where it's like the dollar, if he's going to create tariffs, those dollars aren't flowing to go purchase goods offshore.
Mm-hmm.
And because those dollars aren't flowing offshore, let's say, I'm just going to be simple-minded here and just say China, for instance, those dollars moving into China to buy all these goods. Now those dollars aren't being sold to go ahead and pay wages and salaries over there, or rent, right? Because that would be essentially a sell pressure on the dollar. Where then the mentality is that, that dollar is now going to flow to some worker here, maybe wherever, and there's a minimum wage that has to be paid. But now when that worker makes that income, they can go ahead, turn around and buy goods and services within the same economy. So it's not a sell pressure. And just that simple understanding of kind of where that dollar is going to flow at the end of each transaction, it's kind of understanding, like, okay, so if tariffs are going to rise, the dollar should be rising as well. But if anything, that lets Trump start to negotiate from a position of power with a strong dollar. Go ahead, make those negotiations that he wants to make, and then that would allow the dollar to loosen, just like it kind of did in his last 4-year run. So knowing that the dollar, and I had this little on my chart here. Am I doing this? No, I'm not. Sharing this tab. You can kind of see this green little rectangle here. And I made this post a while ago saying, how would Bitcoin behave right here? And clearly it didn't behave very well. But the reason I like to point out these, because if you're sitting in crypto, you want to pay attention to sort of these big price movements. I like to call them these high velocity moments, to where we saw price almost make that attempt to get in there, and it didn't really go ahead and close it out, right? And we didn't see Bitcoin really respond, but of course, the next time it does it, slam, it really hit Bitcoin. Those are the times to pay attention to the dollar, right? When it's coming up to a support or resistance, and if it actually makes that move and it's into this high velocity zone, it's going to have spillover, right? And we're seeing it right now, right?
Yeah.
And so, of course, there's some other things that we'll get into when it comes down to the flow report, because they're making ETH look the way it is. But you know what? Like, don't overthink this, okay? Trump's coming in. There's going to be executive orders that get signed when he comes into office. He has expressed he wants to be pro-crypto, pro-innovation, even AI. Those narratives are here. There is no reason to think that, 1 month from now, things are going to be worse. So those that are, remember, Ansem was just trying to bait you and trigger you into creating these over emotional responses to draw out essentially the over complex mid-curve explanations for why this would not be a top. Well, right. Yeah. Bravo to him, but
bravo to him. Well, let's actually use that as a point to pivot to talk a little bit more about the flow reports. Hopefully, for anyone who is just constantly, I always find it funny, at least on X, how as soon as an event happens, everyone becomes an expert in that specific domain. I'm amazed at how many people are, engineers when it comes to what's happening right now in LA, and they can explain everything in perfect detail of exactly what the response should be and how they should operate it. But anyways, let's actually get into the flow report, because I think we've the last couple of times we reviewed this last week, for those who weren't able to join, and they should, because it was a very special discussion. We talked a lot about Athena and what it's meant for the price of Ethereum over all of 2024. So that had a lot of really good detail. We're actually going to be putting together a video around that, taking that over to YouTube. But if we go back and think about the last couple of sessions, we've really seen some softness, I would say, as it relates to Bitcoin and Solana. At least that's my general take on what you've shared. And then with Ethereum, it seems to be a little bit of a mixed bag. Both on one hand, we're not seeing really good accumulation in some of the areas we'd like to see, or at least the flows aren't as strong as we'd like to see. On the other hand, it feels like with Athena and what it's done, it could start to be this sort of coiled spring that at the right moment could just rocket up and surprise the market, which, in a lot of ways, that's what investors are really, that's how they're rewarded, right? Is getting into something long before that spring erupts. So Ben, where do you want to start? How do you want to kind of walk through? Is this going to be an Ethereum mostly focused today? Do you have stuff you want to share from a Solana Bitcoin perspective? How do you want to navigate?
Yeah, I think we'll look at Bitcoin first, because it's going to be quick, then move into Solana, and then ended up with Athena. But if you don't mind, just before we get started, I had somebody share with me that Laura Shin had, I think Kane Warwick, founder of Synthetics, and I think iPhoenix is his new product coming out, and then Mark Zeller from Aave. And they were talking about the Athena flows and kind of hand waving that, my comments regarding, essentially being suppression on ETH's price due to what's going on with Athena. They kind of said, oh, well, Bitcoin makes up, 60 some odd percent. And I just want to make the point, like I did make that comment, right? And the reason why it has an outsized influence on ETH is twofold, right? The first one is just the different cap. Okay. So just the fact that, if you have dollars for dollars, and let's call them similar, but one has, a third of the market cap, of course, it's going to have an outsized influence. Okay, then the second one is that Bitcoin's able to overcome such things because it has an outside interest in acquiring Bitcoin through the ETF, something which Ethereum's ETFs are not really showing much to date. Right? So those two influences allow this structured product that Athena's created, to have that influence on ETH, and it's being shown. So just wanted to make that comment because they were saying that, correlation is not causation, to which, I say, that is the market structure dynamic. And
sure,
I think it was inappropriately hand waved off, but I think it was just they didn't have enough time, to be fair.
Fair to them.
Going on.
But it's also the nature, I feel, sometimes it takes a lot to get into the nitty gritty of this stuff and to really give it a nuanced view. So
yeah, and when you're involved with the project a little bit too, like you don't want to shine a negative light, and I get it, right? You don't want the whole ETH maxi community coming at you with pitchforks. So
fair enough.
All right, so getting into it, moving on to
Bitcoin.
Yes. To start off, I think it might be easiest just to look at the fees. When we think of Bitcoin fees, typically fees are going to be moving first before we start to see a lot of movement on the price side of things. We kind of saw the movements in October and, of course, for the first half of December. But then when it came down to around looks like just less than 2 weeks into December, fees just kind of fell off a cliff and they never recovered. And we haven't seen it since. And that really helps us just tell the story that, people aren't moving Bitcoin on to and from exchanges or wall to wallet or to L2s to perhaps catch, sort of this L2 narrative that has trying to gain traction, but just quite hasn't had that success to date.
Right.
Then let's see, when it comes down, I got to flip back over here to my trading view chart. And we think of those flows, and we just pulled up on a 4-hour to make it. So down here is that Coinbase premium that I constantly allude to. We saw it turn positive for like just one day. Is this it right here, January the 6th? I believe that might have been the Monday. Yep. When kind of Wall Street came back. We're like, hey, you know what? Things are looking positive. The flow looks positive. We're starting to see a little demand. The ETF showed a little bit, but how short-lived that was. I mean, it already fell off a cliff by the night of that first trading day, and everything responded ever since. And you're not seeing much demand on Coinbase come back, right? Until we see that come back, it's kind of hard to get too optimistic that we're going to kind of reclaim 100K and move on forward. But, you know, stranger things have happened.
Fair enough.
But yeah, that you can see it coming right back down into the ETF flows. Just a lot of red figures showing up for 2025 for the start, right? Remember, the 6th was great. We had positive inflows, good CB, Coinbase Premium, almost had $1 billion show up, but then ever since, just hasn't been looking the same, right? Yeah. So we have depressed fees showing up on the network. You don't have a Coinbase Premium showing up, and then you have the ETF flows, reflecting that negative premium as well. So we're not in a great position. Right. And as far as Bitcoin moving on chain, we were talking about what was going on with liquid restaking tokens and sort of that L2 thesis. What was it? Babylon went ahead. They lifted their cap. We saw great flows showing up. Solve, I believe, it has its own issues that are apparently going on with Solve Bitcoin. I believe they've addressed them fully. If not, I'm not fully up to date on there. There's the caveat, but the flows they plateaued. We haven't seen much attention show up there. So you're not having demand show up to go buy Bitcoin to move it into these kind of more risky opportunities to go ahead and farm potential token drops. So yeah, that's Bitcoin. It's not looking the greatest.
So to summarize here, we don't have on-chain demand really showing up. We don't have the fees showing up, and I know just tangentially to that when I look at sort of the ruins market, I look at the ordinals and inscriptions market, that's just flatlined. And then we have on the fees perspective, we're not seeing movement just for Bitcoin. We're not seeing the L2 pickup and the ETF. So basically, from a flow perspective, everything is kind of flat or down. So we really aren't seeing any kind of measurement of movement that would suggest no, we're ready to start getting a little bit more into bullish mode. Ben, I want to hear your perspective here before we move on to Solana. When you look at the flows and you think about from so much of this now being captured from a TradFi perspective through the ETFs as well through the MicroStrategy play, is there a cyclical side to this? Is there a rotation that happens in January that perhaps people that are mostly familiar with crypto? I mean, it used to be, we talk in January about the Chinese trade, right? The fact there would be Chinese New Year, a lot of people would be selling, there'd be a lot of sell pressure as people were looking to buy gifts. We don't talk about that anymore. What about more from a TradFi perspective, rebalancing or anything of that nature? Is that something that people should be aware of, or is that overhyped?
I don't think I have enough. I mean, if you look at the flows, it really does suggest that something got turned off, mid-December. Right? There was either profit taking, there was either risk off taking place, lock in your end of the year bonus. There's definitely something at play there. And it's kind of easy for us to kind of point the finger and then quickly say it had to do with taxes and bonuses. And we don't necessarily know the exact truth there, but there's something, right? It can't be fully written off. If anything, there's also the second portion, which is, let's go ahead and as we move closer to Trump's inauguration, it was such a good move that took place moving into the end of the year. It's happening early enough where if you look at what might happen in 2025 and somebody wants to get long-term gains, like you're in a pretty good position with plenty of time to go ahead and hit that 1 year mark, right? And then go ahead and sell it off at the end of the year for next year and go ahead and claim long-term gains. So it's
a possibility, but
it's
hard to say from the data.
Right.
Okay.
Right. There, I don't have necessarily, the accountant's, data feed, if you will, but
That's fair.
Um,
Okay. Okay.
I'll just add one last thing, Marconi, which is just on the fee side. It does look like it's starting to kind of bottom out, which would be, it can take a long period of time, or sometimes, as we see right here, it was a pretty quick recovery again. So it's not like it's going to continue to trend lower, down and to the right. If anything, there's a little bit of upticks on a few things that we could point to, but it's a wait and see. Clearly, the whole market is now just waiting for either Trump or some other catalyst to form and then kind of come back to life, which there's going to be a few other points later that allude to it as well. But that's pretty much it for Bitcoin.
That's okay. Well, I think this aligns to sort of the messaging we had from Benjamin and Amit talking about this is a time to sort of, hold on, wait and see. We're going to see what happens with the Trump inauguration. Don't go out there and get it crazy right now. Okay. So there we have Bitcoin. I think next we're doing Solana. We're going to wrap it up with Ethereum today. Is that the right order?
Yep. And Solana, I'll just be pretty quick here. It's just amazing that retail just continues to do what retail's doing of late on Solana. I was expecting to see the fees drop lower than where we're sort of at right now. It's trying to update this Dune earlier, but it just doesn't want to update this morning. It's like everybody wants their dashboards updated today, but regardless, it's still up there. So I'm going into the pump fund dashboard that I like to look at. Like, there is a lot of addresses still there. There's tokens being launched. The activity is still present on pump.fund. And so that's a healthy sign for Solana, right? That's where they sort of eat their cake when it comes to fees, driving fees over there. So AI agent narrative, as long as that continues to be able to have legs on the back end of the Trump inauguration, Solana does look poised to have enough demand to sort of move the needle, right? It's able to continue to earn the mind share of that retail activity. So it's 2 weeks ago, if you asked me if this was going to be elevated to where we're at today, I would have said no.
Yeah.
I would have said this narrative would have been gone, retail would have been gone, and we would be kind of in search of something fresh and new on Solana. But the fact that we see this here, it's a surprise, and it should be taken note that if the market starts to recover, activity starts to recover, sentiment starts to improve, this could potentially hit some record highs here as far as activity levels on Solana. So it's important to that.
And it's interesting. We talk about retail. I think the sentiment, it's hard to gauge, right? We don't have a really good metric that's going to tell us exactly if retail is here or not. But I think it's pretty safe to say, new retail has not returned to this market. I think that's the consensus. So if we're seeing the retail here, perhaps some of it's new, a lot of it is legacy, still playing around in the Solana sandbox.
Yeah, and you know what? It's puzzling. You see a lot of these tokens down like 60, 70% right now. And it's like, how does retail still have enough dry powder to continue to do things? Like, it's a question I have. But you know what? It is what it is. MEV is making their money. It's translating to good yields for the token. So these are things that you want to see. Is this sustainable, right? Price needs to go up for that to happen. Because it is sort of an extractive system, because it is a casino, right? Let's be clear. This is essentially a casino environment that exists with all these tokens being launched, and you have a very low probability of hitting it, similar to, pulling a slot machine. So is that going to be sustainable? Only if price continues to rip. So Solana, right? It still has retail fees are decent. They're not trending lower as I personally expected, if you asked me 2 weeks ago. And if price starts to recover, sentiment improves, and you see these tokens that probably a lot of retail is in start to improve, it could definitely have a second life here.
Yeah. Okay. I mean, it's a surprising story for Solana. It seems to continue to surprise all of us. So is there anything else from a Solana perspective you want to share before we get into ETH, which I imagine has a little bit more meat?
I didn't pull it up, but I saw, I don't want to butcher their name. So I'm going to pull it up and ramble and buy myself some time here. As Kairos Research, they actually mentioned that Binance Solana had some really impressive lows on Solana. So actually, I want to pull that up as Solana restaking. I believe it's going to be this one, to see how big of a movement it had, and it is not the right chart. Of course,
it's 2025. I'm expecting no less. Everything's a little bit off kilter.
All right, it is 15 hours since it's been last updated. This would be Binance Solana. There you go. It's pretty decent flows. Hopefully you can see that.
Yeah.
Maybe I can make this a little bigger here. But yes, so what does that mean? Either Binance is getting ready to get active in the Solana ecosystem, or similar to kind of what they did with Ethereum in the last cycle, maybe they're getting ready to attract some retail onto Binance Smart Chain. One of the two, right? We haven't heard CZ's plans of late of what he's really going to do. Now that he's out, now that he's engaging with the community, it sounds like he's really wanting to continue to build and really kind of build some massive projects within the ecosystem and move the needle there. And we haven't heard those plans yet, but I would have to imagine it has something to do with Binance Smart Chain. So there's something brewing here, right? Maybe it's something worth a dig here soon to see what Binance is up to. But interesting to note.
Yeah, interesting to know. Yeah, we'll have to see. Okay. Well, I guess more of wait and see, and don't get overly optimistic. This is not the time to get overly optimistic on Solana, make a crazy trade, although it has a few surprises. All right, so bring us back to Ethereum, the one with the most amount of information we can get into.
Yes. And this one, we can sum it up as the good, the bad, and the ugly. It's more bad than good.
Oh, all right. Well, this is, I was going to say, I think before you joined, we did have a question here from Toby. Guys, do you still believe in ETH? Kind of interesting in each of your ETH targets. We've talked about those targets in the past, but very curious to hear your thoughts on sort of how this is progressing. Every week we're talking the flow report about how ETH is progressing, and it feels like the constant underachiever given all of its tailwinds that really should have put it in kind of pole position.
Yes. And if anything, it's just realizing a lot of headwinds of late. And that's kind of going to be the takeaway for today, which the first item I want to kind of point to is, I like to refer to this as Ethereum's moneyness ratio, and kind of just moneyness ratio in general, but as applied to Ethereum, it's actually, let me back up a minute. So look at how ETH is used on chain. It can be sitting in a wallet, it can be sitting in a smart contract, or it could be sitting in a lending protocol and used as collateral. Each of those three different instances of how the token is used, sort of gives and implies a certain moneyness to the token. If you see all the tokens just sitting in a basic old wallet, could we say it has good moneyness qualities to it? Probably not. Right? But if it's being used as collateral on the other end here, and people are willing to go ahead and kind of tap that store of value to go ahead and borrow against it for other reasons, likely for higher productive reasons outside of speculation, fingers crossed, right? Then it has better attributes as it relates to money. So it has higher moneyness, as I like to say. And so we synthesize that and we put it in this ratio here, and we can really hone in on just either one of these yellow or green lines. And as kind of Ethereum's moneyness factor starts to rise, this is what I like to talk about with these supply shock sort of instances where there's not as much supply readily available in the market because people are using it, right? People found this good use case for the token so that when it comes to the next buyer of that asset, there's just not as much going on. So the market has to go into price discovery mode. And that's what we see happen when the ratio starts to rise. And we saw it again in 2023. And then we saw it later on in mid 2024. But in November, it sort of peaked, right? And it's been kind of sagging ever since. And we are forming kind of these lower highs of late and lower lows as that's taking place. And we can even zoom in to kind of see it better. It was up here about 22%, and now it's down to 21%. So what is driving that?
Yeah. I'm very,
So I was just kind of using that to tee up, how we look at the flow of tokens to better understand is it a good flow or is it a negative flow? And we can see it a little bit easier on this one. And it's really having to do with the amount of ETH locked to Beacon Chain. There's been a lot. There's been a lot of unlocks that have been taking place since November. And if we dive into that to see who's unlocking, which believe it or not, you actually can kind of check that out. Thanks, Hildabi, again, for a great Dune dashboard. He checks it out by entities. And you can check out like what's been the change over the past week, month, 6 months to better understand who's been in this process of unstaking or staking. And if we just look at over the last week, we have this massive entity down here of Coinbase. And it's not a small number, right? It's 186,000 ETH have been essentially unstaked. That's you got to wonder why, right? When we think of Coinbase, we think of it as the entity that is acting as custodian to all these institutions and essentially the ETF providers. So if we actually look at the Ethereum ETF flows, they've been pretty horrendous of late. So it's kind of interesting. I'm not speculating that, they just take that custodian capital and they stake it, they make the spread, but maybe they do. I don't know, but this is not causation, right? This is correlation. It's just interesting to note that there's sort of this relationship between that. But if we also, something that I noticed as well, which is Ethereum ETFs started to trade, we actually saw, and I believe, what was it, August or July, they started trading. Where are you, Coinbase? There you are. So July, I guess, or somewhere in there. It's just been unstaking ever since. I don't know the reason why. Maybe somebody listening here can provide some insight on that, but ever since July, for the last 6 months, Coinbase has been in a constant bleed of unstaking, which, as it relates to Ethereum, right, that has to do with its moneyness factor. So that's, I was supposed to start with the good, right? But I guess I started with the bad here.
Oh, this isn't the ugly. Oh, okay.
is the ugly.
So just to kind of summarize here, we're seeing the moneyness go down because, and it appears to be that we're seeing an unstaking happening on Coinbase, and that could be related, we think, to the ETF flows. Did I get that right?
I think it has to do with whatever role they play as it relates to some of these ETFs, because, you've just been up and to the right for years.
Yeah.
Right. And then all of a sudden, the rate of change here of the amount of ETH staked on Coinbase is going down like this. Why? Right. I don't have a good answer. Right. But this is a trend that doesn't look like it's slowing down, and it's influencing essentially ETH's elasticity, which is essentially its resilience to sell pressure.
Is it, and we're not seeing this moneyness, the sort of, if it's coming out of here, right? It's being unstaked here on Beacon. What about going to some of the other protocols? So, maybe they're offering a better yield, or they're packaging it with something else like points or drops or something that can make it more inviting, so people are just taking this out. Is that a possibility? Is it possible that the model doesn't fully account for all of those?
So it does take into account all the derivatives of ETH, believe it or not. It's like, oh my God, I think it's got a lot. I mean, we were doing a stablecoin analysis. We have 49 different stablecoins. And here, I think we were just looking at this morning and, just trying to think of what that looked like. It was probably about 15 to 20 different ETH derivatives. So it definitely takes into account. And looking at this chart, like you can even see, we take into liquid staking tokens and liquid restaking tokens. And then we even look at like how those liquid restaking tokens are used on chain to better understand, what maybe those are moving into these lending protocols, which we did see a good bit of. So it is not an easy thing to do. I want to be like, this took a lot of effort, a lot of work of just being able to get this snapshot of ETH on chain, where it's not just ETH in the basic sense. It's, what they're going to move ETH into EigenLayer, right? Or they're going to move it into EtherFi. Think of how kind of complex, that is, because if someone purchases that liquid restaking token, or they go ahead, they lock it up and they get that in return, do we really classify that as like sort of being illiquid? In our models, we don't, right? Because you can go ahead and sell that on the market tomorrow. It's fully liquid. I get that the ETH backing it has been staked, but we don't account for it in that fashion.
I gotcha. Okay.
Right. So that's important to know.
Yeah. So I guess what I'm hearing is no. I mean, this actually is accounting for the various ways in which that token could go, right? So if it's being unstaked there in Coinbase off the Beacon chain, it's not going into one of these other areas that would increase the moneyness for Ethereum.
Yep. The only place that it's not accounting for is, what's going on Arbitrum and Base, right? There could be something there, and perhaps they're unstaking ETH and moving on to Base for some reason, for part of their operations, which is, very possible. But then it's like, this is not I don't know, that's a different conversation.
Okay, so this is the bad. Are you going to show us the ugly or the good next?
Yeah, let me back up and at least say the good here, right?
Okay.
Because I just somehow skipped over that and wanted to just torch Ethereum here today. But it's slowing down, right? The amount of ETH being withdrawn from Beacon Chain, and that's kind of what this stat is right here. It is slowing down a little bit. It looked like it was, again, correlated, not causation. Had to do with end of the year, possibly tax stuff. I kind of alluded to this, I believe, on X, that Daniel Wang here, 100,000 ETH being unstaked here on the 16th of December on that week. He might have influenced the market. Right? He's like the only name you see on here. Everything else is an entity. He's the I don't know if he's founder or co-founder of Loopring, which now does Tyco. So, I mean, he's a big-time developer in ETH. So he apparently unstaked, maybe sold, maybe didn't, don't know. But it's slowing down. That was the chart up here. This is a 2-week net flow. So it's a little bit delayed, but we're starting to see these flows start to change a little bit. And Binance just suddenly step up. Speaking of Binance again, clearly they're getting active with something.
Right.
Okay.
So there's the good. So the bleeding is slowing. It's not stopped, but the rate of change is coming down.
The rate of change has slowed down. The moneyness has started to look like garbage, but this could influence that ratio in the next, start to kind of create a reversal, which is what we want to see. Now, there's the possibility that some of the protocols that exist on chain could make up for the bad, right?
Mm-hmm.
You could see a lot of tokens moving to Aave, which I'm just really teeing up myself here to say that Aave has had inflows of late. Somewhere you are here, chart. There you are. Okay, so I mentioned we look at a lot of stuff. So I know there's a lot going on in this chart, but
not enough.
Yeah, ignore the title. It's wrong. But you have all these protocols here. This is ETH and its derivatives, and where they kind of sit on chain.
Mm-hmm.
And so if we actually look at Aave, we see it's just kind of progressing up and to the right. This protocol is looking strong. It's attracting capital. I just saw yesterday or the day before, or a couple days ago, sorry, that it increased its supply caps on ZK chain. So it continues to exist in all these other chains and get more supply, get more moat. So, I mean, it's just a monster. It's unstoppable force to be like, and it's soaking up some ETH, right? But not enough, right? Like, let's zoom in here a little bit. 2.9 million to 3.03, right? That's a decent uptick. Looks like 100,000 ETH. I think it was just north of 100,000. We pulled up the number. So it's definitely progressing, and it's helping soak up some of it, but it's not, like nothing can soak up that much.
Right.
And Maker continues to be pretty dominant here. Let's see. And to be fair, I got to also pull in Spark because Spark has been absorbing a lot of it. Spark is kind of an offshoot of Maker, but they're part of the ecosystem together. So that's absorbing some flows. But here's where we kind of get into. Actually, we're not even in the ugly yet.
We haven't got to the ugly yet because this is not feeling great. I'm not going to lie.
Yeah. I'm just bringing this up to show that, there is some absorption happening on these protocols, but it's not enough to make up what's happening on Beacon Chain. The ugly is sort of a byproduct of the points farming era. And where are you, Zirkit? There you are. This is a protocol that I don't even remember who's behind it. It might be Paradigm is one of the entities, but Zirkit's another L2. There was a lot of points that were farmed using Pendle. And that period had ended, I think, like a week before the end of the year. It's probably going to correlate with this. The 30th, I think it was like the 26th or 27th, we found that period ended. So there must have been a snapshot that took place on the 30th. And then you can see just massive move of tokens here from 389,000 down to 187,000 just 24 hours.
Wow.
Right. So where are those tokens going? We don't really see it being picked up by all these other protocols. We see some movement on Aave's. Maybe that's where it went. But, if anything, now we're talking about, as we kind of zoom out here and take in all of these different, we're moving too fast. That's starting to glitch on me. Oh, what protocol is glitching? That looks like Maker. There we go. It's not going to do it. Okay, so we don't see this upticking that fast, like fast enough, right?
Yeah.
So with that Zirkit movement, we don't see enough of the tokens being absorbed, and we're not seeing it outpace the Beacon unstakes. So that's as far as where's ETH going. What's the trend? It's bad.
Yeah, it's still weakness. And you talked about before so you just laid out the good, the bad, the ugly, really, which was the bad.
No, I haven't gotten to the ugly.
Oh, this is just oh wow. Okay.
This is just the bad.
This is the bad.
Yeah.
And we touched on good like an appetizer, moose bouche, and now we just had, I guess, or the first course of bad. So are we getting the ugly now?
So it's almost like the good is like the unstaking has slowed.
Okay.
Right. The bad is that the supply flows just don't look, they just look bad, right? We just saw the massive Zirkit on stake, and we don't see enough being absorbed elsewhere. So wait to get to the ugly. We got to pull up Panda to go ahead and run some Panda Intel. Oh, it just disappeared on me because it hasn't been refreshed. But as we're talking, I'll pull it up. Where are you, gas fees? There you are. Looking at gas fees, there's not enough demand on the network. It's just going down into the gutter. I literally think I saw a 6 Gwei pricing yesterday for the network, which, single digits is almost unheard of nowadays. And if you don't have any demand showing up, right, then there's no native demand for the underlying token itself. And here we are talking about, I'm getting ready. I see my soapbox right next to me. I'm thinking about pulling it up because I'm about to preach. Why are we discussing increasing blobs and trying to increase all the scalability when we can't even drive demand? Right? No one's trying to move things on chain, and no one's asking why. All right, no one's asking that scary question to find out the truth. But anyways, this is the ugly. There's not enough fees being driven to the network. The red indicates when the rate of change of fees is low, and it's kind of entering this period where it just remains low for an extended period. And then green is a hint that there's a possible reversal on the fees, which I think a few shows ago, that's what we were looking at when we started the year. There was a little bit of this hint of activity happening on the network. We saw okay flows, and there it was. It showed up in price, but quickly that little bump in fees it was not enough momentum to carry forward, and it's been depressed ever since. And it's just flatlining right now. It's ugly, man. This is ugly, right? This needs to improve. So
what? Okay, so not a good flow report in terms of outcome. I mean, a good flow report in terms of data for all the listeners out there, but not a good look for Ethereum. And I think back to a comment you made last week, which was that the behavior of Ethereum appears to be ones who are fine to lock it up, get a yield for those who are here today, and that it's really the ETFs that are going to bring back some of the interest to the network. That's kind of what you're expecting to be a catalyst. And I think you also share your views, which are very long term, right? To be fair, right? Everything we're looking at flow report, it's on a weekly basis. Some of it's on bi-weekly or monthly, but it's not looking over multi-years. So you have a very bright future for this. So I just want to contrast that with the data that we're looking at right now. What is your perspective on anything that would be near term outside the ETFs? We talked about that before. Do you see any protocol launches that would have the same kind of, let's say, factor as Athena's had over the last year, but maybe in a different direction that would bring back some of that engagement on the L1, that would actually drive some of that demand? Do you see anything on the horizon for Q1 even?
People love using ETH to make yield, earn points, and farm tokens. That is one of its best use cases since 2020. 2020, everybody was farming tokens on all these various dexes and supplying liquidity with their ETH because ETH was the main asset that all these other ERC20s flowed through. Right? So you go ahead, you lock up your ETH, and you're going to be earning tokens. Then we saw in 2024, everybody was doing points, and everybody was taking their ETH, using it as collateral, and farming those points to earn, speculatively, more tokens that would give them good returns. And then we see now Athena has clearly found market demand, and the demand is that people want to use their ETH as a store of value and essentially tap it for additional earnings. And that's what we have. It's a really good yield product that has definitely hit the demand. That is the on-chain scene. That's what people want to do, right? Like Ethereum Foundation, hello, wake up, right? That is your signal of how people use ETH, like plain and simple. It shouldn't be a question anymore. And so if we're going to go look forward, like what could drive that? And at the moment, I think one of the areas I'm most interested in is all these services that have to come on chain that could potentially drive really the current narrative of the moment, which is all these AI agents and essentially off-chain things that are taking place. Because it doesn't have to just be an AI agent that talks on Twitter, right? Like I think that's just something we focus on because so many individuals are actually on Twitter, and it's like even like somebody made this post on the data layer of AI agents, and I went ahead and I looked at it, and it was just the rankings of like the sentiment of AI agents, and you know we're sitting here at J Labs, and you know we are beyond knee deep in data. That is our specialty. That is our wheelhouse. Like you want to understand what's driving price on a protocol or a token, or you want to understand like what's going on in a pool, you know, how's the distribution affecting your price, and you know, all these things, right? This is consulting work that we do all the time. And it's that layer of understanding. And so now you have to take it and package it up in a metric that makes it very easy to digest and understand what is happening and I like to oversimplify it. Like when the metric goes up, that's good. When the metric goes down, that's bad. When it goes up, make it green. When it goes down, make it red. Like I try to make it as simple as possible for anybody that's looking at it to understand. And they don't need to know really what's going on under the hood. Right? Because we can make it as complicated as possible. We really can. And the problem is, it's like, how is that going to help the individual who wants to maybe build a product for users do what they need to do?
Yeah.
Right. You're just overcomplicating it. And so we try to keep it as simple as possible. So then now when we go ahead and we see the quote data layer for AI agents being this leaderboard, I just can't stop but laugh. Like, you know, I'm not high and mighty here, but like, guys, like that is not the data layer, right? You're just scraping a bunch of data on Twitter and making it accessible. Okay. The true data layer, if you want an AI agent to work for you, like this is the financialization of assets on chain, and agents can go ahead and operate essentially with agency, and they essentially have a little bit of sovereignty here on chain. And so you're going to give them that. So what data could they use to go ahead and make those decisions and act as that assistant for you better? Right. And that's where I don't think the market has quite gone yet. And there is some opportunities that do exist where ETH can be used. And I can't really get into it, unfortunately, but it's, you know, ETH can be used as collateral for a lot of these services that can be supplied to these agents. And so if that catalyst hits, if that narrative hits, that would be really positive. One of the areas I think we can look at is a lot of like liquid restaking tokens, for instance, like EtherFi is probably a good example. Like, can they go ahead and figure out how to earn more yield with essentially a lot of services that are being provided? If they can figure that out, and you have essentially like a Renzo or Kelp ETH make one yield that's attached to sort of like a bucket of services that it has exposure to, compared to EtherFi, who has their own bucket, and then maybe you have like some specializations. I kind of like to think of it as like the bond market, but that's a different analogy. If you have like a specialization of certain services that get offered and it gives you that exposure, right? Now you can essentially have really, really specific allocations to a certain service that gives you higher yield. People actually want to buy it. They're willing to pay for it. And now you're using ETH as a way to earn. Like that, to me, is probably the best use case we could ever see.
Right. Okay. I'm laughing a little bit, Ben, because my question, if we go back to the origin of it, was what do you see in Q1? And what I got, what I'm hearing is that there's a lot of focus on sort of the periphery or this sort of veneer layer of what these technologies might be. And it's possible that we're not really seeing where the serious builders are putting in the time and effort to take the services, combine them, harness them for material, useful products and services. Because maybe they're just building, right? They're not talking about it. But what we're seeing now at these early stages is not that yet.
Mm-hmm.
So, if I think back to this sort of the good, what we talked about the bad, we talked about the good, which was a really, really small amount of good. We talked about the ugly. I put this as a super ugly wrapper, unfortunately, right? We're not yet seeing it. I think it's something that you're always keeping an eye out for. So we'll have to see if that changes. And certainly, I know there's a debate online about sort of the promise of the AI agents. What are they actually going to deliver? They're going to be service level? Is it going to be materially useful? I want to stay optimistic. It'll be materially useful. And I'm also want to stay in the camp that you're in, that this offers this brand new design space with AI agents and the blockchain that I think naysayers are just too easily going to say, okay, this isn't really meaningful. I want to believe that it is based on my understanding of the tech. So we'll have to see. For now, the flow report is not great. We're not seeing any green shoots of new projects coming online that would really unleash that, but it doesn't mean that it can't. And if you're a developer who's listening to this and you made it through 2 hours of discussion, hats off to you. But also, we would love to hear from you. We'd love to talk to some developers, hear what they're doing, maybe give a behind the scenes look into the challenges and also the opportunities, because I think we're here, Ben, right? Because we do see an opportunity and we think it's much, much larger than anything that's actually happening right now.
Yep. I mean, the conditions are set. We're ready. We had a reset. We're not ahead of ourselves on rates and funding rates and euphoric levels, and returns aren't super excessive now because we had a massive pullback. So day one, Trump, executive orders come through. We got plenty of overhead room to go, and narratives will emerge, faster than daisies sprout in springtime.
I think that's a great spot to wrap up today. Is there anything else, Ben? I don't mean to cut you off. If there's anything else you wanted to add before we wrap.
No, I could go on for hours, but let's not.
Well, if you're out there listening, and again, if you made it to the end, definitely be sure to follow Ben on X, where he's sharing these ideas regularly. And obviously on Telegram, I think we're going to put out the where you can follow and get the views into Panda. Join that community if you want to start looking at the trading and just get the insights. I think it's amazing what they've built. Something we've talked about doing more in 2025 is really highlighting a lot of these capabilities. So much seems to happen in stealth. I think it's time to kind of walk out from the shadows and start putting some light on it. I think the community and Twitter, or rather, the crypto community at large would benefit from it. But that's going to wrap up today's show. Appreciate everyone for joining. Let us know in the comments you got questions, ideas, things you'd love for us to be able to review that we haven't already. And I will leave you with my PSA. If you don't already have some dry powder, make sure you get your hands on it. There's buying opportunities like we just experienced. You're going to want to have some always on hand for the buy the dip moments as we head into 2025. With that, this is Marconi White signing off.